Please be advised of the disclaimers.
Hey, welcome back to my channel, Side with Pinnacle Trading here. Today I'm going to show you how to play Apple earnings. So we think the stock is going to go up or go down or even maybe sideways. I'm going to show you how to play all three ways. So I'm going to show this on Robinhood. I personally did not use Robinhood, but whatever broker you want to use. Let's say what I'm going to show you the majority of the people do. They just go to the Apple stock and they buy shares, or I'm going to show you a better way with the options. So what people normally do is they just go, okay, the stock is right now it's about 154, so I think it's going to go to about 160. I'm really bullish on the stock. And what happens, let's take a look on this one. So when the stock at expiration on Friday, let's say it goes to 160, right? We're still not making profit by Friday. Let's say it goes up to 161, just about break even. We need to move over 161.3, which is more than a 4 or 5% move in the stock. And after this stock goes up to 163, 164, a big move up, that's when we start making profit. But if it stays flat, right now the price is at 154, as you can see on the chart right over here, and the stock maybe can go up, go down, but let me show you a better way to play these earnings. So let's get rid of this call. Let's not do this, and I'll show you a better way. This method will be using a bull debit spread. If you don't know what that is, make sure to grab my course to learn, or even just search up videos online. So this is going to be a bullish debit spread. So what we do is buy a call underneath the strike price and we sell a call right over it. So what happens right here, let's zoom in. So when the stock at Friday, next Friday, after earnings at expiration, when this stays flat, even if it's the same price at what is it right now, which is at 154 area, let's say nothing happens and it just stays flat, we still are at the break even or even making profit. In this case, our maximum profit is $37, maximum loss is $63. Our break even if the stock goes down to 149.63, we still are breaking even if it goes down to 150, drops a couple of bucks, we're still making money, all in this green area. So we have so much more cushion than just buying a call itself. Let's do the opposite. Let's say we think the stock is going to go down, we're bearish on this, we want to do a put. So let's go in the money on this one. We're going to buy a put, and then we're going to sell a put below that strike price. So what happens when this stock goes down or stays flat? Again, same thing, where our maximum profit is going to be $102 and our max loss will be $148. So again, let's zoom in on this. So we're buying that 160 call and we're selling that 157 point, we're buying the 160 put and selling the 157.5 put, as I've showed you right over here. So what happens when the stock stays flat? We still make money, and the stock goes down, we still make money. But even if the stock goes up, it goes against us all the way up to about 158.5. We're still breaking even. Let's say it goes up to 157, whatever it is on this cushion area, we're still making profit. So you see how it's so much better than just buying a call or just buying a put. Let's say we want to say that the stock is going to go up to 160. We just go and buy a call. Our max loss is 134. Since the stock can go up unlimited price, it can go up to 1,000. Our max profit is unlimited. But how likely are you even able to meet that? And realistically, you want to give yourself some cushion and give a good risk loss ratio. So that's why I think the bullish debit spread or the bearish debit spread are a lot better way to play the stock. And we can see the numbers right now that the consensus is about 1.13 and the earnings whisper is 1.19. So if we just look at this and kind of see what other people think, I think it's going to meet the earnings personally myself, and the stock will stay about flat. So I'm about 54% on what other people think. So we want to anticipate what other people do. So that's a lot better way to play this. Even if we just look at the stock overall, it has gone up over time. significant growth in the stock, the company, the dividends, everything, solid stock. But I think this time it's going to stay about flat. So you can use the two methods that I've showed you, which allow you to play the stock, whether it's going to be sideways or whether it goes down, whether it goes up. It allows you to take advantage of all three types of ways the stock can move. It's not just up or down, it can also stay flat, which is what kills option premium. And if you want to learn more, head over to my website, that's pinnacletrading.us. You can join our chat room for free, where we call out all these live trade ideas, day trades, swing trades, long term. And you can join our chat room, link in the description below or on my website. You can also grab my course. I show you a lot more strategies that you can do with stocks, options, how to invest, etc., and teaches you with stock market education, trading and investing psychology, and how to do it as well, and also some of my secrets to you to cut your learning curve strategy. Make sure to hit that like and subscribe button, and I'll see you in my next video.